Good morning, good afternoon, and good evening, depending on where you're joining from. Welcome to another space of JST Investments. So, before I start, I just want to thank all of you who motivate us to learn more every day. Today was a great day for us at JST, where conviction on many of our stocks played out in unison, and all the achievements are dedicated to our Twitter community, which has provided us this platform to grow and prosper. So, coming into the main topic of our discussion, today, our CIO, Mr. Aditya Shah, or AS as we call him, as we have like two Adityas in the team, other one Aditya Kundavar who has also joined us. He will simplify the mega merger of HDFC Limited and HDFC Bank that has just been released. We will try to discuss the pros and cons of the merger and also our view at the end. So stay tuned. Yes, let's keep this brief and to the point. Plus, we have planned a lot of questions and answers at the end. So, jumping on to the first question directly, what is happening in this merger? Could you please provide us more details about it?
Yeah. Good evening to all of you. Thanks, Anish, for that brief introduction. So, basically, put in very simple terms, this is what is happening. HDFC Limited, which is an NBFC, which is the country's largest NBFC with about 5.5 lakh crores of AUM that it manages, is now merging with a bank. Banking license is a supreme thing to have in India, and everybody dies for that license. So HDFC Limited is basically seeking a banking license and merging itself with HDFC Bank, where HDFC Bank has a AUM of about 12.5 lakh crores, and HDFC Limited will cease to exist, and HDFC Bank will take over all the AUM. So there is a swap ratio that has been decided. For about 25 shares of HDFC Limited, you will get about 42 shares of HDFC Bank that is there. HDFC Limited shareholding in HDFC Bank, which is about 21%, is going to get completely extinguished. And there will be a wholly new merged entity that is there, which will manage about 18 lakh crores. Remember, SBI is the largest bank in this country, and it manages about 26.5 lakh crores purely on the AUM side of it. Of course, SBI runs a very large GSEC book that is there for the government. But on AUM like to like basis, now this is solely the number two bank in the country. And as we move on, we expect HDFC to at least deliver about 10% growth. And we are looking at the largest private sector bank or the largest bank in India being born over the next 5 years. And this is a very monumental moment where, as the Indian economy starts to improve, starts to go on an upcycle, we have very big banks sitting there with huge loads of capital to capitalize the Indian economy, that is it. So, A, very good moment. B, a very big bank is born. C, extremely positive for the entire banking sector, not only HDFC or HDFC Bank. Right? So, this is a broad overview of what is really happening on the merger that is there.
Thank you. So, that's amazing, actually. So, just considering the scale this final company, that is HDFC Bank, will reach over the next few years. However, the question that comes to me, whenever I talk to industry veterans, is that they have been anticipating this merger since the last 2 years. So why haven't they proceeded till date? Like, why now? What's the reason, AS?
So, Anish, we need to go back to the 2008 18 Ireland FS crisis. Basically, this merger has been in the works for about 10 years now. But there were certain things that the Reserve Bank of India started doing ever since the Ireland FS crisis, which really turned on this merger. Reserve Bank of India saw that the light touch of the NBFCs was not really working, and many NBFCs were violating blatantly the rules that are there. So, ever since the Ireland FS crisis, which was a big scam in the economy, a lot of NBFCs were coming under the scrutiny of RBI, and RBI started to close up the regulatory arbitrage that was there between a NBFC and a private and a bank that is there. So, what it did, the asset recognition norms of NBFC were brought to the level of the banks that is there. RBI also hinted that slowly and steadily it will move NBFCs to a regime where CRR and SLR will need to be maintained. And moreover, supervision costs continue to go up for NBFCs, that is there. So increasingly, what the RBI was really doing was that it was incentivizing people to become NBFCs, and it was wanting people to move towards banks, which has been the stated intent of RBI since the last 2 years. And now, today, HDFC Limited, seeing that this regulatory arbitrage was no longer available, which was available for 20 years, decided that, look, this is a very opportune time. Why is it a very opportune time? We are at the bottom of a real estate cycle. Remember, HDFC Limited only does real estate loans, that is there, i.e., housing finance loans or developer loans, that is there. We are at the bottom of the cycle. From here on, credit the capital requirement of for both companies will continue to increase dramatically as the cycle goes on. Right now, over the next 6 months to 6 to 12 months, the capital requirement will be relatively low. Point number one. Point number two is we are again at the bottom of a credit cycle, that is there. As we are at the bottom of a credit cycle, uh, again the capital requirement right now is not that great, and as we move on, we will find that the capital requirement will move up, and this is a very opportune time for the bank to take over the housing finance subsidiary, that is there. So these were the two or three things that were taken into consideration from both HDFC Bank and HDFC Limited, and that's why we went ahead for the merger, that is there.
Really good. Like that's some deeply thought out points here. So could you please make it clear, like how does the merger benefit both HDFC Limited and HDFC Bank shareholders?
Yeah. So, Anish, over the last 1 year, we have been maintaining our allocation to HDFC Bank, that is there. But what I keep hearing is that HDFC Bank has lost its mojo to ICICI Bank. ICICI Bank is very good. XYZ number of things about ICICI Bank, right? So, single most secular driver of loan growth for ICICI Bank over the last 2 years has been their housing finance business. Housing finance business gets 50% incremental disbursals from ICICI Bank and accounts for about 27% of their growth. That is it. That case was not available with HDFC Bank because their housing finance portfolio was always housed in HDFC Limited. That is it. Now, what does happen is that HDFC Bank will secularly capture the loan growth of the housing finance sector, which has got tremendous potential. Apart from tremendous potential that is there, 70% of HDFC Bank's customer do not have a housing finance loan, that is there. And similarly, about 70% of HDFC Limited's customer do not have a liability franchise, that is there, or a deposit franchise, that is there. So what is really going to happen is that cross-sell opportunities for both of these companies continue to be extremely strong, be it deposit franchise, be it AMC business, insurance business, be it the payment gateway. The cross-sell opportunities for both these for both these entities continues to be extremely strong. That is point number one. Point number two is today, as HDFC Limited's cost of borrowing is at about 5.85%. As this merger starts to stabilize, we will find that there is a huge cost of deposit or cost of funds drop for the HDFC Limited business that is there, because the bank is an unlimited deposit taking bank. We will find that the cost of deposits will drop to about 3.5 to 4%, which will be very, very positive for HDFC Bank over the long run. So this will not happen tomorrow, but this will happen as the bank continues to take even more deposits that are really there. Point number three, as I said, bottom of the credit cycle, very opportune time for both of these companies to take themselves over. And there is a special case that the 20% shareholding of HDFC Limited in HDFC Bank will get extinguished because of the RBI rules that is there. So, given that scenario, we find that this merger will be A, EPS accretive, B, book value accretive, right? And C, the most important thing, capital adequacy ratio of the merged entity will not decrease, but it will increase. So, which is a real positive that is there. The fourth point, which is very important for HDFC Limited shareholders, is that There was absolutely no succession plan for what will happen when Mr. Keki Mistry and Mrs. Renu Kannad, who were the very big architects for HDFC Limited, they go away. What will really happen? Now this merger makes sure that Shashidhar Jagdishan, who has ample number of years left in him, and the whole team of people that is there uh, in HDFC Bank will take over the company, both the companies, and drive them forward. Right. So there are a lot of positives for both the companies that is there, but as an economy as a whole, for Indian economy, it is very positive because we are getting a very strong bank that is there, which is capable of capitalizing the Indian economy at any point in time, sitting on a 20% capital adequacy ratio, and having 20 lakh crores about AUM. That is it.
Makes all the sense. The size that they will reach, like 18 lakh crores, and then also they will continue to grow at 20%. So I'm just in awe of the economics of scale we are going to see when the integration of these two entities is complete. However,
Definitely.
it shouldn't be that easy, no. So what are the key challenges that you see as they proceed for this gigantic marriage between the two largest lenders in India?
Yeah. So it's just a wow merger that is there. The first time that I read it, I found it spectacular that is there. But all the mergers come with their own set of challenges that are there. So HDFC and HDFC Bank both have their kids in terms of investments that they have made in HDFC Life or HDFC AMC or a Bandhan Bank or an RBL Bank or HDFC Ergo or a HDFC Credila. So regulators will not take this very kindly. It is not very clear as to what will happen to these investments. We have seen examples of Kotak holding on to 100% of their subsidiaries. Possible that the RBI will say that you can hold on to these subsidiaries. Possible that the RBI will say that you need to sell some of these subsidiaries. That's a roadblock for both of these companies that is there. That's point number one. Point number two is 5.85 lakh crores of HDFC Limited's book does not have a CRR and SLR on it, which is huge amount of capital that is involved. About 70,000, 60 to 70,000 crores of capital will need to get parked with RBI into CRR and SLR because now HDFC Limited will be classified as bank and bank rules will be applicable on their existing book also, which is really huge amount of money that needs to be put into very low yielding assets that is there. So this is a huge challenge for the company to find that amount of capital. However, they have written to RBI to allow them at least 2 to 3 years of time to incrementally meet this challenge that is there. That is one of the biggest hindrances to this merger that is there. Then the third point that is there is that since so many companies are involved in this merger, there are so many regulators that are involved that there can be roadblocks at any point in time. We need to monitor these roadblocks that are there. However, if somebody can do it, Mr. Deepak Parekh can do it. He has built a bank which was zero and has now built it to 20 lakh crores. So anything is possible with him. And the fourth and the most important challenge is that we are now sitting on a bank which is 20 lakh crores big. It is never easy to manage such big AUM that is there and still grow consistently about 15 to 20%. That's the biggest challenge for the bank to take on the AUM, to take on such big responsibility and still grow while maintaining pristine asset quality that is there. Of course, these challenges are not very easy. It's really hard. But as I was telling to Anish today, that if somebody can do it, it's HDFC Limited and HDFC Bank and the whole group that is there because they know how to underwrite loans, they know how to get their money back, and they know how to maintain the asset quality. So there are challenges, Anish, but the scope of banking sector is tremendous in this country. A lot of India's population remains underbanked, and if this bank comes in, it will be tremendous for the Indian economy. So there are negatives, but positives outweigh really what is really happening on the ground. That is there.
Yes, like I will be pretty honest, like it does seem like a tough climb, but do not worry, like I will pray to God every day that this merger goes through peacefully.
Yeah,
Also, I do
so
not. Yes, 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 please.
expect the impossible from the HDFC group that is there. Because frankly, let me tell you, I was expecting not HDFC group to do this, but I was expecting Bajaj to do this first, because that was the mandate from RBI that big NBFCs should start converting themselves. But you never say never. It may be hard, but it is not impossible, right?
Literally, like anything can happen in stock markets, and I do not
Yes.
worry about HDFC Group's execution because leaders
Yes.
like Sachidhar Jagdishan are there. So, finally, I
Yes.
would just request you to like give a view on this merger and what should an investor do with the shares that he has. Should he or she continue to hold or sell on the euphoria that we saw on the stock markets today? Just for your view and our aggregate view at
Yes.
JST Investments. Thank you.
Yes. So, for point number one, the swap ratio is a very odd number that is there. 25 shares of HDFC Limited will gain 42 shares of HDFC Bank that is there. So, please make sure that your shares of HDFC Limited are in multiples of 25. If they are not, as on record date, your money, your shares will get sold off and your money will come back to your account as cash. If you don't want that event, so maintain multiples of 25, 25, 50, 100, 200, 300, that is there. That's the first point that I wanted to communicate to everybody that is there. This merger, according to us at JST Investments, is a mega merger and it's once in 100-year event that is there. It's extremely positive for both the companies that is there. Both the companies will go on to create tremendous wealth for shareholders, even from here. Even though HDFC Bank is a 9.1 lakh crore company that is there, it will continue to generate tremendous wealth still. It will be a steady compounder. However, there can be short term challenges in terms of execution and in terms of integration. That's where you need to be very careful. Of course, the stock market sometimes goes overboard, so you don't need to go overboard. You need to build your position slow and steadily and watch out how the merger really progresses. Of course, any of this is not a stock advice. You must consult your own financial advisor before acting on any of the discussion today. Uh, so our view, Anish, continues to be very strong. We are seeing the transformation not only of the banking sector, but the transformation of Indian economy from being a small developing economy uh, to taking the first step to becoming a developed economy, where point number one is the lending sector continues to become extremely strong. And that's the message that I take from today. And the second message I take from today is the lending sector has truly bottomed out. Truly, the biggest bank at the bottom of the cycle is doing a big acquisition that is there. So, proud moment for all of us in the stock markets, in the business world, and of course, for the great man, which is Deepak Parekh.
Like, sure, fantastic answers on the mega merger AS. Like, today, our credit economy is just 130 to 140 billion dollars, and matlab, 130 to 140 lakh crores, the total credit in our economy. And HDFC Bank, after this merger, will be 18 lakh crores. So I do see a future over the next 10, 20 years where HDFC Bank will be as big as our total credit in our economy. It is for probable. So hopefully that happens as we go forward. So not to forget that we continue to hold both HDFC Bank and HDFC Limited across our client portfolios and our own. So our views may be biased. Please consult your financial advisor before making any buy or sell decisions. So before we start the Q&A, in which we are going to take in a lot of questions about the lending sector, AS, would you just like to talk about our current high conviction portfolio small case offering and also our
Yeah.
future plans to bring in a BFSI focused small case?
Yes. Guys, we have already launched ourselves on the small case platform that is there, which is customized for our retail clients that is there. It's a high conviction portfolio where we just don't buy or sell just because the stock prices are going up or going down. It's a portfolio for the long term. And on that portfolio, there are some mega trends that we are trying to capture. One of the biggest mega trend continues to be the rise and the rise of the large private sector banks that is there. Uh, we have both HDFC and HDFC Bank that is out there. Then we play on mega trends such as in pharma, we play the trends of CRAMS CDMO business, we play the trends of specialty generics, we play the trends of biologics that is there. Then we play the trend of specialty chemicals that is there. Then we play the trend of insurance that is there. So it's a very diversified portfolio. It has the best of the best companies. It has market leaders. By market leaders, I don't mean that they should be only large cap. They can be small, mid, or large cap, and it's a very good diversified portfolio that is there for anybody who is starting AUM of about 5 lakhs. They should consider their investment through small case with us. We are long-term investors, and anybody who has a time horizon of about 5 to 7 years should look at that portfolio. That is the first point that is there. This is called the GST high conviction portfolio that is there. The second point is that unlike many AMCs and PMSs, we will not be getting a technology fund at a relatively high valuation of the technology sector that is there. At GST Investments, we try to be 2 steps ahead of the market, and the credit cycle has really bottomed out. In fact, the results that have started to come in are extremely strong. For example, just now the Bajaj Finance result has come, where we see a 27% growth on Bajaj Finance that is there. Right? HDFC Bank itself showed a 20% growth in terms of loan growth that is there. So our point is, over the next 2 to 3 years, we will find that lenders will continue to do extremely well, and over the next 1.5 2 weeks, you will see a banking and financial services portfolio from GST Investments shortly. Anybody who is looking at 3 to 5 year horizon and is wanting to play the credit upcycle should be looking at this portfolio, and we are getting this portfolio in order to serve the retail clients, not to gather AUM and not to make money. If we wanted to do that, we could have got the technology fund very easily, but we are not doing that. So kindly consider that, and when we launch the portfolio, we will do a detailed analysis of what we are really doing. So Anish, those are the 2 products that we are really wanting to offer for our small retail clients.
Thank you, AS. So now I'll move on to the Q&A session. Anybody who has any questions, please raise your hand and I will add you as a speaker. So this is a great opportunity to solve all your doubts about the lending business. And do not forget to give your well wishes to AS as he has just got engaged. We'll start. We'll start with Mr. Prashant. I have just added you as a speaker. Could you please go forward with your question? I think there has been some issues. I'll add more speakers. Mr. Gurmeet, I've added you as a speaker. Could you please go forward with your question? I think you have to unmute yourself, Mr. Gurmeet.
Hello.
Yes.
My question is regarding this amalgamation of HDFC with the HDFC Limited, bank with the limited. How will this subsidiary company like the HDFC Life and HDFC AMC will be affected? Because they are not, bank is not supposed to hold certain percentage of these companies. How will it affect their synergy?
No, thank you for the question. HDFC Bank has written to the RBI saying that they will want to continue to hold on to these subsidiaries. We have seen an example of Kotak, where they own 100% of ownership in their life insurance product, in their AMC business, in their health insurance business that is there. So that's not a problem really for a bank to hold them. We even see ICICI Bank holding on to their life insurance business, to their asset management business completely. That is there. So HDFC Bank has written to the regulator. Regulator should agree, and in case the regulator does not agree, then all of these investments will be transferred to a holding company, where the holding company will become the owner of these investments that is there, and HDFC Bank will have ownership in that holding company that is there. So it is up to the regulator to decide, and the regulator will take its own sweet time. But I don't expect any problem for HDFC Bank to hold a stake in any of the subsidiaries that is there. However, there can be a problem for them to hold their stake in RBL Bank or Bandhan Bank, because according to RBI rules, a bank cannot have ownership in another bank. That is it.
And the second point is regarding this, because this entity will be around 15% of the total weightage in the broader indices, say this Nifty and the Sensex. How this will affect these mutual fund schemes which are holding will be holding less, because it will be more concentrated now.
No, so that will not happen. There will be a reorganization of Nifty when the actual record date really happens, and the weight of HDFC Group will start to come down as the amalgamation really happens. That will be that is about 12 to 18 months down the line, and the index will take note of this merger that is there. Effectively, the index has now become 49 stocks, because when HDFC Limited gets extinguished, the the stock count comes down to 49, and there will be one more stock that will be added from the Nifty Next index that is there. It could be any of those stocks, it could be Bandhan or whatever it is, but there will be reorganization of weights that will happen once this merger becomes effective. However, this merger will be effective in about 12 to 18 months, so there is long period of time there.
Okay, sir. Thank you for the nice answer, sir.
Thank you.
Hi, I'm calling from Bangalore. Thanks for the opportunity. So, NBFC space post HDFC, right? HDFC is getting merged, right? So, what is left? LIC. So, what do you think the future for the rest of the NBFCs, the likes of LIC, housing finance? Thank you.
So let me tell you this very clearly. The RBI is nudging all big NBFCs to become banks. I expect, moreover, Bajaj to also take a very similar call that is there, that they could take over some bank or the other to get merged. The regulatory arbitrage between an NBFC and a bank is slowly going away, and it makes no sense to not take deposits. The biggest advantage of a bank is that it is able to take deposits. So I expect more and more NBFCs to start converting themselves into banks. That is there. That is the first point that is there. The second point that is there is that LIC Housing Finance, I am not sure that they will convert themselves to an NBFC that is there. Of course, LIC does have an IDBI bank, but I expect IDBI to fully get divested to a bigger bank that is there, and LIC Housing Finance will continue to stay the way they are. There's a bigger problem for LIC Housing Finance, that they lack the killer punch to deliver good quality, superior loan book as well as asset as well as returns to shareholders. So you need to be very careful on that company particularly. However, on the NBFC space, very optimistic that a lot of the companies will start converting themselves into banks.
Yeah, God bless. If you have any other question, you can go forward, or we can move on to the next question.
See, HDFC is the biggest player, right? It is the warship. It is a warship. So once that has fallen, right? What is left? So what will be the strategic fit for LIC or Bajaj or whatever it is? Whom do you think that the next potential five players who will be in action for the next 18 months? Thank you.
No, that's not our job to predict that who is going to do what. But the broader point is, we need to really understand the direction in which the NBFC space is really going. The direction is this, that the moment NBFC becomes big, the RBI wants it to get merged. So that's what you have to think, that if your company is going to go big, RBI will force them to get merged. And that's the whole real point that is there. Who will get merged with whom? That's anybody's guess. That's a layman's guess, and that's not my job to do. My job is to figure out who will go there. And as I'm already saying to you, the next big candidate for this is not LIC Housing. No way they are there. Bajaj is the one who is under tremendous pressure from RBI to get them converted. Why? Because Bajaj is already crossing about 1.5 lakh crores of AUM, and that's big. That's really big AUM that is there. Any NBFC who is above 1 lakh crores will be under the scrutiny of RBI to get themselves converted into a bank that is there.
Yes, Meet, could you please go forward with your question? Yeah, you need to unmute yourself, Meet. Okay, I'll add more speakers. Prashant, I've added you as a speaker. Could you please go forward with your question? Kishan, I have added you as a speaker. Could you please unmute yourself and go forward with your question?
Hi Aditya, thank you so much for your nice session. Just wanted to update on existing customer of HDFC Bank who already have a share of HDFC Bank. What will be impact on their holdings? First thing, and can you update a little about the Bajaj merger?
Okay. Yeah. Yeah. Prashant, let me answer this and then I will get back to you. Thank you for that. For HDFC Bank shareholders, there is no change in the shares that is there. Of course, HDFC Bank shareholders will continue to own a lot more assets. The ownership will get increased. But per se, the market will price that in. You don't have to do anything on HDFC Bank shares that is there. If you have that, so I'm not giving any stock advice, but there's no change as such that is there, right? That's the first point that is there. Second point on Bajaj, there's no update as such. The management continues to say that we will be on a wait and watch position. However, this is the first consolidation which will now make a lot of corporates think, a lot of NBFCs think that really there is a possibility to get merged with a bank and take it up. For Bajaj, they have a shareholding in RBL that is there. They own about 5% of RBL that is there. And it could be a very interesting match that is there because RBL is available at a huge discount for Bajaj to grab it up. Given the network that RBL really has, Bajaj will take a lot of time to create that network. So that's the potential match that is there between Bajaj and RBL. And of course, they do business on the credit card side of it as well. So this quarter will be very interesting when we talk to the management, and every NBFC management will be questioned about this merger that is there and what is their take and what is their strategy on this management on this merger that is there.
Yes, Mr. Parimal, could you go forward with your question, please? And you need to unmute yourself.
Yeah, thank you so much. Thanks, Aditya, for such a wonderful session. And heartiest congratulations on your merger today itself. I understand it may not be a coincidence. So, moving to my question, now I would confess honestly that 90% people have missed this bus of HDFC. So, people like me want to catch a new bus. So, what would you suggest to these people? I'm investing right now in HDFC. Would it be a good idea? Second, if no, then what are you expecting? Are you expecting such mergers to happen in, say, an IDFC or something like that? Thanks.
Okay. See, Parimal ji, I cannot be more open than this. I had written this in plain English language about 1 month ago when the HDFC Limited stock was trading at 2000. The biggest contrarian bet today in the markets is HDFC Limited. If we have written this, we know what we are writing. And still, if you have missed the bus, then you should think, what are you really doing, right? That's the first point. Not to take it in a bad way, but that was a simple and honest and straight advice that is there.
Agreed.
That is
I
the
agree.
first point that is there. The second point that is there, if you're searching for the next HDFC or the next Bajaj or whoever it is, sorry, we will not be able to comment on that because time and again we have said this that these businesses themselves are so great that you don't need to go ahead and look at new businesses that are there. New businesses take real time. For me, I've been tracking this sector for so long that I know that any new business that will come out will have new challenges that is there. Of course, after I complete this, Anish will talk about the challenges that Mr. V. Vaidyanathan has had to face. He's a great leader that is there, but he also had to face multiple challenges that are really there. So my advice would be that don't look for the next HDFC Bank or the next Bajaj Finance. They're all in front of you. Just that we don't want to invest in that, and we want to go ahead and invest in the next big thing that is there. So HDFC Bank will continue to do extremely well over the next 5, 7, 10 years. I say this because I've been tracking the company for long. and I know the management inside out that is there. I was just on a call with them last week as well. So there's no point going and searching for new stocks just for the sake of it. All existing stocks will be good compounders as well. And I leave it now to Anish to answer about the IDFC bank question that is there.
See, I'm just questioning about IDFC because I was reading your reports,
Yeah.
and you have a strong rating for IDFC, if I'm not wrong.
So, Anish, we talk about it,
Yes.
but we really
So
like. Just one second,
yes,
Anish.
yes,
So
please.
we really like the man who is called V. Vaidyanathan. That is there. Anish, take it forward.
Yes, sir. So actually, we don't give any rating reports
Yeah.
on any company. So that's another thing. But at the end of the day, if you study what has actually happened when the Capital First and IDFC Bank merger took place, and how many challenges that even a good management group has to face to make a bank, you know, when people forget about this thing that when HDFC Bank and Kotak Bank entered the banking environment in India, the market was pretty much open. So like you had 10, 15 PSU banks and no one else. And if you gave like better service, if you gave faster service, then people came to you. But today, in this current scenario, you have like 10 other banks to go to. So why would you choose an IDFC First Bank over HDFC Bank or a ICICI Bank? Just simple question. So it is actually very tough to build a bank at this point in time. So that's why whenever I'm talking about HDFC Bank, I always question. So which is the next HDFC Bank? Even I want to find that now because I also want to make multi-baggers. But there is no such thing as the next HDFC Bank. That's the thing that we have to just live with. And as and when these banks continue to become bigger, the trust that we have for these banks grows. And that's why the cost of capital that these banks have, that actually goes down. And that's what is the moat of these banks. I was just discussing this with AS today that SBI has a moat when it comes to cost of capital because the trust that SBI has built over the last many, many decades has a lot of value. And that's when a new bank comes, like when a RBL bank comes, or when a IDFC First Bank comes, or even when a regional bank tries to go all over India, they try to expand pan India. It's actually very tough to build that trust in people's mind. We just saw recently, like a single scare in RBL made a lot of people pull out their money from that bank. So that will be the case with a lot of these new age banks, with a lot of these next HDFC banks. But I'm not really saying that IDFC won't do well or someone like Bandhan won't do well. They will do well. Like if you study the 20-year history, whichever lending institution has been able to survive in India, they have been able to compound really, really well. And I'm not talking about like 10-15%. They have been compounders of 25-30% CAGR over long periods of time. Because the Indian lending opportunity, as I've told you, 10 years back it was 30 lakh crores, today is 130 lakh crores. 10 years forward, it will be 400, 500 lakh crores. So this market will continue to grow at 1.5 times the nominal GDP rate, which it has across the world. Like whenever an economy grows, the credit grows at a much faster rate. So yes, new players will come up, but new players won't find it as easy. So then you have to study it continuously. For example, I'm studying IDFC very, very closely. So just a disclaimer, I hold that in my portfolio. But if you tell me that, if you ask me that if I'm 100% sure as to this bank will do really, really well over the long run, no, because that's what the environment that you are dealing with. You have to continuously be on the lookout as to what are the things that they're doing right, what are the things that are doing wrong, and what sort of challenges are they dealing with, which are many, many. Even if they're growing at a faster rate, then it creates a problem because whenever a down cycle comes, then the credit costs can go a lot higher. And what if they don't survive that? So this is a constant process that you have to go through. You will never find the next HDFC Bank. You will just find a new bank which has a new potential and which can become very large with the opportunity that we have. So we'll move on to
Anish, just wanted to add one small point. I mean, I will close
yes.
it.
Yes,
So
yes.
I used to work in a telecom company in a mid-level management, and I used to work in a eastern state. Why I'm talking particularly about IDFC? Whenever I did market, so IDFC is not big on bank per se, but they are big in terms of giving loans in line with Bajaj. I'm telling. So whenever I used to do market, I used to find their guys in consumer shops, and in a city like Raulkela, I mean, I could find 12 to 15 cases on daily basis that person was writing on the consumer goods. I mean, TV, fridge, and etc. And I just asked him कि delinquency कितना है, तो बोलता था 2% 3% पेमेंट आ रहा है. So if Orissa is behaving such a way, I think I mean, this is my first-hand observation. So I concur to your thought. I'm not saying IDFC will become HDFC, but they are definitely doing something good, which people may not observe on field. I mean, you are looking at Excel. I am giving you on my on-ground feedback.
No, Parimalji, like my father owns a mobile shop and he uses the IDFC service all the time. So I know the modes that you're talking about, and it's not really easy to build such a system. I'm 100% sure of it. But what I'm talking about is not the delinquencies in good times. What you're talking about is delinquencies in normal times, which is 2 to 3% at max. So you make a good ROE. In banking, it's never about credit cost in a good time, it's about credit cost in a bad year. So in a bad year, if your credit cost is 10, 15, 20%, you get wiped off. That's the risk in banking, and that's what you have to hedge. You have to survive in banking to make money in banking. That's how it works. And that's what you have to track when it comes to IDFC, when it comes to Bajaj Finance, when it comes to HDFC Bank. And
That's
HDFC
right.
and Kotak has been very successful in doing that. So we just need to track. You can't be 100% sure with 2, 3, or 4 years of history. You have to see through cycles. You're putting your hard-earned money there. So that's what
I
I just
agree.
have to say.
I agree.
Yeah.
Thank you so much, Aditya.
Yes. Basically, that was the last question. Thank you for tuning in. That is all from us today. Good night and take care.
Thanks a lot, everyone.